Okay, so here's a quick update on my week's trading. Because I've been working a lot this week, I've not done much trading, and I literally just had a couple of trades on my favourite strategy, which is the London Breakout strategy. And if you don't know what London Breakout strategy is, I've shown it in various different videos. I think in my last video I showed you a trade that I won on London Breakout strategy. It's really popular with traders, and it's a day trading strategy that literally trades normally the pound against the US dollar. Just briefly, what you do is you highlight the highs and the lows of the Asian session, and then you wait for the breakout when the London session starts at 8 o'clock in the morning. And then you set the various ways you can trade. You can set a limit for how many pips you want. Normally I go between 15 and 20 pips, but more importantly is the stop I put on it, and this is what I want to show you here on the risk management. So for example, last week, this week just gone, I've only done 2 trades, and here we got the red here. This is a losing trade, and this big blue bar here is the winning trade. Okay, you can hover over it and it will tell you. So I lost £50 on that one, but I made £241 on that trade. Now, this £50, actually it could have been a lot more. It could have been £150, because what I was doing, I was setting my stop at 15 pips, looking to get 20 pips, and at £10 a pip, that could be £150. But I've been using a trading stop, which I've explained in previous videos as well. But basically what happens is you can set a trading stop, so if the price goes in your favour, then the stop will move up, and eventually it moves up to break even if it gets that far. But even if it doesn't, it cuts down on your maximum loss, and you can set, the trailing step, how far you want it to move it. I had it up moving 5 in my direction, so I only lost £50, which then increases my profit loss ratio. Get my teeth in my profit loss ratio here, and the profit loss ratio is basically the amount of profit you're making compared to your losses. So here we got £241.20, average loss of £50. Bear in mind, okay, it was only 2 trades, but this is a simplified example of it. So if you click on learn more, by the way, this is in trade analytics in IG Index, but I'm sure many other brokers as well have a way of actually analysing your trades, and it's always good to analyse your trades, keep an eye on the figures, because what can seem big losses at the time will even themselves out over a period of time. So as it says here, profit loss ratio measures the performance of your trading strategy, so the higher the ratio the better. And it says there, if your example is £600 per trade, your profit, the average loss per week is 200, that's 3 to 1, which is a good return. Okay, so you don't need to work out how they work it out, and then here the return rate is basically 2.91. Basically what they're saying is that if that figure is 1, you're breaking even, less than 1, you're losing money, and more than 1, you're making money. And that's how they work it out. And then this gross exposure down here, you don't really need to know about. It says 279.24. I'm not risking that. Theoretically I am, but I'm not actually got that money on the table, but that's due to leverage. So, and then if you look at the chart, obviously because there's only 2 trades, it's a straight up chart, straight diagonal line, £191.20, and that's just for the week on a very small account. And then here is the monthly chart. Yeah, again, this is just the London Breakout strategy I've been trading on, which you can trade it daily. I trade it daily if I can, if I'm not working, and if there's an opportunity. For example, if the price doesn't break out of the high and low of the Asian session, then you don't trade it, and you normally give it up to from 8 o'clock to 11 a.m. UK time. That's what I normally do. I trade on a 5-minute chart. As I say, I've got other videos showing how I trade this, and traders will trade it differently. So for example, I've only had 5 trades over the month. So obviously you've got 5 days in a week, but sometimes you don't always get a trade. And so I've been working sometimes, so I've not been able to actually concentrate and work out the highs and lows of the Asian session and then trade it. So the blues, yet again, these blue bars here, you've got the value here. The blue bars here are the winners, and these 2 are the losers. Yet again, you see, look at the losers. I'm keeping the losers really short, so £100 and only £50. The £50 one I showed you earlier on. But the winners, look, we've got £201, 102, and then the big one, which showed you £241.20. And we translated to here for the month, and you can see 3 out of 5 trades at 60%. So we were 50%, obviously it was only on 2, now 5 trades. Is return rate 205, obviously we're above 1 because we're making money, because it's 242 ratio. In other words, £181.40, which is really good compared to a loss of only £75. So you can see it's more than double you're getting back. And again here, look, we look at the average hold time of the winning trades, it's 2 hours 7. So the winning trades tend to last longer, and that I find generally in trading anyway, whereas the losing trades, you fizzle out quite quickly, and losing trades are only averaging 1 hour hold time. Yet again, this gross exposure sounds a lot. I'm not actually risking all that. Theoretically, you are through leverage. Just gives you an idea on your risk. So the higher this figure is, the more risk. So that's 60% win rate. So you don't need to have an 80% win rate, 90% win rate, as some traders on YouTube will show you, to make money. And I think overall for the year, I'm averaging just under 50%. But the point I'm trying to make is, you let your winners run and you cut your losses short, and you keep your losses very low, 1%, 2%, 3%, maybe maximum 4% of your account. You just keep it very low. I mean, this is just a small account I'm on, and as you can see here, the graph looks slightly differently because it started off there, we've gone up, we've come down. And if I was to show you my graph overall for my account for the year so far, then it never goes in a straight line. You go up, you come down, and 1 minute you're below your target, you're in loss, and next minute you're up, because only one trade can change everything. And that's the thing you have to learn. You can't get too downbeat on 1 losing trade, 2 losing trade, 3 losing trades, because then one trade can, as long as you're keeping your losses small, then one trade can make all the difference. So as you can see there, it's 394, basically £400 for the month, which isn't a lot, but that's just on one strategy. It's just on the London Breakout strategy, and that's just like on a very small account, and that's only trading when I can. So the London Breakout strategy does work, and you have to stick with it, and you have to find what suits you as regards time frames for it. I use a 5-minute time frame on the chart. I've also introduced things like, which I've shown on a previous video, a Dodonchian channel into it to know where to set my stop. But at the end of the day, London Breakout strategy doesn't work all the time, and I think over the whole year, I think when I have traded it, it's like 47% okay so far. This month it's 60%. So you do get losses on it, but as I've shown you, you just keep your losses small, which is what I've done, especially here with the trading loss. I started using the trading loss, which is cutting my losses small, and maximizing your return. So normally I go for 15 to 20 pips, but as I say, that will vary. So I normally look at the Asian session, and if it's already the spread of it, if the Asian session, the high and the low it's sort of moved by a sort of about 40 pips by the time I look at it at 8 o'clock in the morning, then based on my experience, it's highly unlikely you're going to get like another 20 pips moving on top of that. I mean, you do. I mean, this is the market, nothing's guaranteed, but that's in my experience. But if it's a very narrow range, which is what you want, a very narrow range, you get a good breakout, then 20 pips is done. And yet again, this is where fear and greed. You might be fearful and think, well, I'm only going to try and get the 10 pips. I go on an average of 15 pips, 20 pips. As I say, if it's quite a wide range, and I'm not greedy, I'll go for 15 pips. And even if I keep my, for example, if I keep my stop loss at 10, then ideally you want 1.5, 1-to-1 return over time. It's not going to cut it because of your losses. So ideally 1.5 to 2. And then if it's like 19 to 20 pips for the range, and I'll go for like risk 15 for 20. That's 1.5. I have been risking 10 for 20, a 1.2 return and 1 to 2 return, but I've been finding sometimes that can be not wide enough. So even if I do 15 to 20, that's 1.5 return. But at the end of the day, I'm looking at the stop as well. in my previous videos I've said I've been using the launching channel just to try and work out where the stop is, because sometimes, and some traders on the London Breakout strategy, they'll let it come right back up within the range and set the stop way out there. The trouble is, if it keeps going and you've set the stop way out there, you're going to be losing a lot. And other traders, you know, they'll just let it run when they get a winning trade and don't have any set pips in mind, or let it go for a certain time period, or go for 30 pips, or because it's normally such huge volatility, huge spread on the pound US, you usually get big movements. But I tend not to be too greedy, so 20 pips is my maximum, and 15 to 20 pips, that'll do me fine. But at the end of the day, it's more about, because it doesn't work all the time, it's more about keeping your losses small. So yeah, it's not been as I say, only 2 trades, but you know, winning trades for the week and for the month. You know, 60% return rate. You know, basically £400. We've still got a week to go in this month, and this week I should be able to trade every single day. We'll see what that brings. It might bring a lot of losses. It might not bring much opportunity to trade it, or it might bring in a few good trades. But you know, that's the nature of the beast. You never know what's going to happen within the market. You can only control what you can control, and actual risk management. So yeah, we'll see how it goes, and I'll see you on the next one. Thanks for watching, and please get my teeth in. Please subscribe if you can. I'll see you later. Bye.